Is the industry's chip shortage overshadowing NIO's earnings report? Well, let's dive in. What's up, guys? Welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. So let's talk about NIO. NIO just released their earnings report, and based off initial reactions, it didn't seem like the market liked what it saw. It's down around 1% right now after hours, and it was down 5.3% today, the whole day. And this is probably due to the chip shortage, with news of Ford cutting their production down for Q2, and Ford had it a lot harder, being down 9.41%. But let's get back to NIO. Like I mentioned, it seemed like the chip shortage is affecting the earnings report, and there's mixed feelings of whether the earnings report is good or bad. But based off what we're seeing, even with the stock price falling, it seemed like the earnings report did pretty well. Now, if we take a closer look, the Q1 delivery target for NIO was around 19,500 because of the chip shortage, and they halted productions. This report was released in April 5th, so they gave us a heads up of the fact that they're going to be delivering less cars. They downgraded from around 20,000 to 20,500 to 19,500, but they actually delivered 20,000 cars this quarter, which is a good sign. They met expectations that were set for them before the downgrade that they did on themselves. On top of that, the revenue this quarter was around 7.4 billion RMB, which is around 1.114 billion USD, compared to last quarter around 6.174 billion RMB, and this translates to around 953 million USD. The overall gross margin was around 19.5%, which is around 2.3% higher than the previous quarter. Like I mentioned, I'm a big fan of the gross margin numbers in terms of EVs, because it shows that they're reaching economies of scale in terms of production. They can more confidently increase their sales efforts because they're making money in producing cars. They don't have to worry about the loss in cash from inefficient manufacturing. But let's go on. The loss from operations this quarter was around negative 295 RMB, which is around 45 million USD. And even though it's at negative, it's doing a lot better compared to the previous quarter, which is around negative 931 million RMB, and this translates to 143 million USD. This decrease in loss in operations shows that NIO is going to be profitable very soon. Each quarter, they're showing more profitability and increased gross margins and increased gross sales. The revenue growth for this quarter was around 20%, and this growth includes the 10-day shutdown they had due to Chinese New Year's. The whole Chinese government and businesses closed for 10 days for Chinese New Year's, and they mentioned that in this report in April 5th. And even with that 10-day close, 10-day might not seem like a lot, but that's 10% of the quarter. There's around only 90 days in the quarter, and NIO and all other Chinese auto manufacturers didn't do business for 10% of the quarter. If we normalize that and assume that they open for those 10 days, NIO will have a revenue of around 8.22 billion RMB, and this translates to around $1.27 billion USD. This would be around a 33% growth compared to Q4 instead of a 20% growth. So this was due to just their economic cycle. That being said, NIO cars are in high demand, and it's showing that each quarter. So this drop in stock price was due to other factors. It's not due to the fact that they had horrible earnings report. They're showing more profitability, and on top of that, the expected earnings per share actually beat what the estimates were. It doesn't show here on Yahoo Finance, but it was on somewhere else. So what might have caused the drop? One of the key factors, like I kept mentioning, is the fact that there's an overall chip shortage, and it's affecting the whole industry as a whole. I mentioned Ford being down 9.41%, and it's going to affect the industry, and this uncertainty is causing investors to pull back their money even with signs of growth. Deutsche Bank lowered the price target in around April 27th to show that their sales were going to be 7.44 billion RMB. This is a little lower. That being said, Deutsche Bank expected the gross margins for NIO to be lower than it actually was. They expected gross margin around 15.5%, but like they showed on the report, the gross margin is actually 19.5%, and this is around a 4% beat. So it's surprising to see the market react in the way it is. It was down around 0.9% beginning of this recording, and it's down 1.228% now. Now, that being said, in our opinion, NIO seems like a great play in terms of what they showed in the earnings and the strengths that they showed. If you can overlook the chip shortage problem, which is affecting the whole industry, this might be a good play. But that being said, a lot of auto manufacturers are dealing with this problem, and it might continue to have more growing pains in this industry that might affect any signs of growth. Stopping production is huge for auto manufacturers like NIO and growing auto companies, because they need to start having positive cash flow. So what do you guys think? Do you think NIO's showing signs of a bright future? How do you think the stock price is going to move tomorrow or the following week? So that's it for this video. If you liked our content, please give us a thumbs up. We use this as feedback as to whether we're making content worth watching. Thank you very much again for watching, and stay tuned for the next one.